Welcome to another video. Today we will be speaking about how you're supposed to approach your analysis to the market. And we will speak about the Forex market, but you can apply the same thought process, the same reasonings to any market, okay? No matter if it's cryptocurrencies, stocks, or Forex, indexes, any market, okay? And we will be starting with a CAD/JPY, and we will be basically speaking about the current situation, but it's just to speak about some key concepts that I really want to pass on to all of you. Now, if you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform, as well as running an educational program in which I teach all of my students how to trade my swings trading strategies, and I trade them live with them. Without further ado, let's get straight in the video and provide some free value. Okay, so let's use this example on CAD/JPY and see how you're supposed to approach your analysis, how you're supposed to analyze the market. So the first thing that you're supposed to do here in the weekly time frame is look at the market, look at the structure in the market. Where do you see the resistance? Where do you see the support? And what kind of price action the market is forming? So the first thing that you can clearly see here from a weekly perspective is that the market had created this very clear area of resistance here, and all of that resistance is now turned support around this area. And you can clearly see that the market has also created an impulse followed by a correction, and we expect the next impulse to the upside to make a higher high in the market. So we clearly have impulse, correction, and impulse. And we also have a clear area of resistance here that is now turned support. That is something that we can clearly see in the market. What we can also see is that the market has basically broken above of this trend line. There was, in this case, a bearish trend line, and it had a lot of confluence in it because it had multiple touches. You can see one touch here. Here there are many candles that touch. Again, a lot of rejections, meaning that the market is interested in this trend line, and the market almost went for a retest of it, but didn't succeed in going for a full retest, for the simple fact that the market had a previous resistance area now turned support. And this is a pretty simple concept in the market. In an ideal uptrend, areas of previous resistance will become areas of support. Okay, this is something pretty clear in the market. Basically, all of these zones here are all areas of previous resistance turned support, and the market basically reacts to them very precisely. Okay, the market loves to respect these areas. So as you can see, the market loves to respect these areas, and that is how an ideal uptrend looks like. And the same thing for an ideal bearish trend. Okay, all these areas of previous support will become resistance. Every time you will see an area of previous support, it's supposed to become resistance in an ideal downtrend. So previous support turned resistance, and an uptrend, previous resistance turned support. That is how an ideal market moves. So in this particular case, you can see that the market had gone to the upside, go back down, again up, now down, and the area of previous resistance is now turned support, and you expect the market to make a higher high. This is something pretty simple and pretty obvious that you can see from the weekly time frame. What kind of other confluences you have? If you take your Fibonacci from the low to the high, you clearly see that the market went for a retest of the golden ratio 0.618 and closed back above the 50%, and now the market is starting the push to the upside from a weekly perspective. So again, we have also other confluence, and how you're supposed to use the Fib is pretty simple. If you want information on the retracement, you just have to take your Fibonacci on the impulse. That is the reason for which we took our Fibonacci from the low to the high, and we have seen that the market had rejected the 0.618 in this low test. So from the weekly, we expect a push to the upside. Let's go down on the daily and see what kind of price action we're getting. So here on the daily time frame, it's clear that first of all, the market has broken this counter trend line to the downside. Why this is not a trend line but a counter trend line, because this trend is bearish and we know from the weekly that we're expecting a push to the upside. So it is not a trend line but a counter trend line. And it appears immediately clear that we can adjust our structure area here on the daily time frame based on the price action that the daily is showing. So basically based on the fact that the market is now breaking above of this counter trend line and that the market had found resistance with this red candle. So as you can see, the market went down, then went for this retest, rejection, and then break to the upside. So creating a layer of previous resistance now turns support. So what we're expecting now is the market to, and what we are waiting for before we can be looking for an entry, is to see the market make a retracement. After the retracement, then what we will be doing, we will be monitoring price action on the 4-hour time frame with the students inside of this area. And we will be waiting for one of our valid entries on the 4-hour time frame. Only if we will see one of our valid entries satisfied on the 4-hour time frame, then we will be taking the trade. It's very important to always be reactive and not predictive in the market, and always wait for all the conditions of your strategy to be satisfied. And this will be a very big risk to reward trade if all the conditions will be satisfied for an entry. Why do I say so? Because from the weekly time frame, the target area that we can take is by taking the Fibonacci from the low to the high of the retracement. Because if we want information on the impulse, we need to take a Fibonacci on the retracement. And the target will be just below the minus 27 of the weekly leg. So basically, as you can see, the target will be very good. Now, overall, what we just analyzed is the weekly and daily time frame. The monthly, weekly, and daily are always for direction. The 4-hour is for entry, but at the moment we are still waiting for a retracement, so we can't be looking for an entry yet. When the retracement will come, we will be monitoring price action on the 4-hour time frame with the students for a potential entry.
I hope the video helped you understand better how you're supposed to approach your analysis from a multi-time frame analysis perspective and from a reactive and not predictive perspective. And that is very important in the market. Now, if you enjoyed the video, make sure you smash the like button and let me know in the comments below. It really does support the creation of more free education and analysis for all of you. And if you still haven't checked out the mentorship program, I really suggest you go check it out. It's a very complete program. You find all the details by clicking on the website. I will link in the description, and I will see you all in the next video.